and welcome to Connect, the weekly podcast of the California MBA featuring movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. Before we get to today's guest, I would like to thank our Connect podcast sponsor, Incelerate. Incelerate helps lenders close more loans through better borrower engagement, the mortgage industry's most innovative customer experience platform, which delivers lead management, sales enablement, engagement, a robust mortgage-specific content library, and data intelligence, all in one comprehensive and highly scalable platform. Incelerate delivers dynamic technology, strategy, and content for every channel of your business to ensure engagement throughout the customer journey, whether it be your borrowers, referral partners, or any other party to the loan transaction. This dynamic enterprise solution seamlessly fits into your tech stack due to their advanced API connectivity, modern design, and open architecture. Gone are the days of managing multiple and separate systems and having your data trapped in data silos. This innovative platform allows you to provide your internal and external customers timely, relevant information based on data intelligence to build repeatable outcomes at each stage of the customer's journey. Close more loans, improve borrower conversions, enhance customer retention, transform your customer acquisition lifecycle, and create customers for life. For more information, visit incelerate.com. So with that, I would like to introduce today's guest. I'm very fortunate to call him a good friend of mine, Chuck Iverson, CEO of Mason-McDuffie. Chuck, welcome.
So much, Susan, for having me today.
So I know you've been a guest on Connect in the past. Of course, you are a member of my leadership on my board of directors. But you joined, you've been a veteran in the mortgage industry for quite a while, and you joined Mason-McDuffie in 2019. What can you share about adapting to a corporate culture from such a well-established company?
Well, thanks for the question. I've got a few notes here, so if I look down, just bear with me, people. So thank you. And again, thanks for the CMBA for having me today and allowing me to just basically contribute to the industry, which I'm so proud of. Blessed in my career. I've worked for, fourth job in 30 some years. But two really formational experiences I had prior to Mason-McDuffie, one at Sierra Pacific Mortgage, where I was privileged to be part of the leadership team that built it into a national company and have the experience of culture and seeing how your actions and behaviors and decisions over years and years and turns impact culture and being part of that. And that was truly foundational. And I think everyone contributes to the company's culture, but the CEO really has an impact on the whole thing. In Sierra Pacific, Jim Cafrani, who's a master business person, he's people oriented, but he measures himself on principles and building the financially strong company so that it will endure any markets. And look at it today, it's probably one of the strongest companies out there in a financial basis, and that's just that, and that shapes the culture really based on what he really values. And then I got to join Evergreen Home Loans, which is another well-established company. 1986. Both companies I think were from 1986. I came in as a newbie there. Don Burton has molded that company, and it has at his has an amazing customer-centric approach to the business around the originators there. And couple that with Tamara, operating officer, and Don are also innovative. And so they're not only just thinking about the loan officer's needs today, but they're innovating products, technologies, the cash offer program. I mean, there's just all kinds of things. And so how does that influence me at Mason Mac? Well, Mason Mac has it's probably, I think we are the oldest operating mortgage originator so there's a well-established culture here I'm looking to build upon that. And, my own personal strengths are in relationship building and just really working with my team. I care about them. I care about the employees. And so, that compassion and care is part of what we want to imbue for our originators and for our consumers. Having said that, I have to, there's no way I haven't been shaped by Sierra Pacific. So I'm going to certainly make sure that that's tempered with sound business disciplines and then an innovative atmosphere, because you always have to be looking at the future. So we'll have our own unique culture here. I think it's, it's really just hit me, a couple months ago, what an amazing opportunity I have to take this organization and to continue its legacy and really build upon it, because it's one of the more tenured organizations and yet better kept secrets in the industry.
Mason-McDuffie has a long history with California MBA too. You probably know this, but Herb Tasker was a former board chair way back when. So long time history. Company has with our organization too.
Yeah, I think it was, and an MBA chair too. So, Herb's a legacy, and, I'm trying to fill those shoes. So.
Yeah, great. So, we're in 2022, interest rates are rising. I think most of my members are kind of looking at new products. What do you would say are kind of the hot products for 2022?
Yeah, it's pretty clear that the alternative market is starting to rise again, and the new name is non-QM because it's not qualified mortgages. There was a pretty severe hiccup at the beginning of 2020 with that marketplace. I mean, it looked like the liquidity was going to go out of it, and really start, but it's come back with a roar. And that's what I see probably as the number one new product out there. And there's a couple products there. There's some products that are based on cash flow for investors. Instead of their documented income is how the property's cash flow. So that's one product that I'm seeing a lot of. And the second would be programs that are self-employed folks, and they validate their income through alternative means. So I think that's the biggest one. My team's already asking about the ARM market. Can we get ARMs? Can we get ARMs? And shift will happen. But right now we're close to an inverted yield curve, meaning the short-term treasuries and instruments are about equal to long-term. And so there's not really a pickup between a 30-year fixed and an ARM product. And so that ultimately will shake itself out, and there will be some intermediate ARMs and some hybrid ARMs out there. So those are a couple of the things that we're seeing. Of course, there's a big rise in non-agency, i.e. jumbo business, just because home values have gotten to be so high. And for me, with our headquarters in the Bay Area and a lot of our production coming from the Bay Area, we have to do a lot of jumbo business. We have 7 different investors for jumbo. 25% of our business almost is predicated on that. And so I know a lot of lenders really don't like it because of the margins, and it's a difficult transaction, but we embrace it because that's what we need to do for our originators. And then probably the last thing, it's not really a product thing, but pricing. Have a history in our industry, and this is like, what do you compete on, right? So you compete on service, price, credit. And so there's always this compression and this, some people call it a race to the bottom on margin, and sometimes on credit too. And I think we have to be disciplined as an industry. I mentioned these alternative products, but at the same time, we've been down this path as well too. So, there has to be, the ability to repay. We have to make sure that we're responsible in our lending things, and as well as our pricing practices, because we're accountable to all of our employees, our stakeholders, our warehouse partners to maintain profitability. So it's a real balancing act for every company right now.
Yeah, I think, balancing act, like you say, I mean, especially for those of us who, lived through the financial crisis and saw kind of the result of some other products. So I think you're right. I mean, now it's balancing, offering those products, but doing it in a very compliant way and way that provides, customer protection. So speaking of compliance, we're in a new era of leadership with the CFPB under Rohit Chopra. what can you share with lenders what you think his particular areas of focus will be?
Well, it's no secret that fair lending is the big, and it's a reflection of society and society's, the American society's commitment to supporting equality. And I welcome a lot of the initiatives. I'm also proud of the opportunities that housing represents for folks in this country. So there's a lot of room, I believe, for us to be innovative and to have an awareness of how we can help first-time home buyers and create opportunities for folks out there. The challenge is that one is, I'm hearing that there's going to be gap is going to be used as one of the tasks or one of the methodologies to help shape lenders' behaviors, through an examination process, but it's very unclear on what you're being held accountable for, in my viewpoint. And as an independent mortgage banker, even more importantly, it may be, do we have the ability to control some of these things? So it's always a scary landscape where, you don't know that how you're going to be measured and what the penalties are for being measured that way, and if you actually can really shape some of the outcomes that you're being measured against. And so it's one where we just have to trust in, first off, advocacy. I think it's super important that we have a strong voice, and it's not to avoid responsibility, but it's to shape a policy that actually has the intended outcomes. And one of the other things that I'm really concerned about is that if you have these vague responsibilities and, especially for the bigger financial institutions, this huge risk that's there, you may actually have the opposite effect. In other words, less access to credit, higher costs. We have to, now factor in all the extra work or risk that's in the business as well too. So it could actually, we could overshoot it, and that's why I think advocacy is so important. Because what I've seen with the California MBA in particular, because I think that's probably the strongest state advocacy organization, is that Pat and John, who you work with on a daily basis, are able to get in with legislators and educate them on what the impact of certain things are. And so it's just really important for the industry to do that. As you know, there's a current legislative topic around fair lending right now in California, a CRA for independent mortgage bankers that you're at the forefront. A couple other states have implemented those really rapidly, right? And so this one, I think, is really, we at least have an opportunity to have a voice in this if everyone raises their voice.
Right. Yeah. Thank you. Great point. Switching gears a little bit about, thinking about technology in the industry. You and I both started our professional careers when there wasn't a whole lot of technology available anywhere. And now, technology is very key for the mortgage industry. What are the particular areas of focus for Mason-McDuffie this year as far as adaptation of technology for the company?
Yeah. I'm a believer in, you do initiatives that are the most important and you really stick with them, because I'm a simple guy, first off, and can't handle too many things at the same time. So it's really important, not necessarily to have every shiny object out there, but to really pick the things that will make a difference. And then I can tell you throughout my career, and this kind of goes back to culture, how long it takes to by a practice or a behavior and get it all the way through your organization. It takes well over a year to fully adopt something that's So for us, we're an Encompass customer. We have a new instance of Encompass that we just created that we're very proud of. But our teams are going around and working with all of our originators on, and this is a never-ending process for Mason Mac, of improving the originator experience. And so we're going to continue just to tweak it and modify workflows and to just make sure we're as efficient as possible with that. And that's the two, right now lenders have to be efficient, try to manage costs, and have a great originator and consumer experience. Now, I believe that if we're really providing a good experience for our loan officers, we have a consumer experience. I mean, that's our bread and butter. So, that's symbiotic in my mind. The second is our point of sale technology and really fully adopting that. And we partner with Simple Nexus, and I think they're a company. I've chosen to try to single source our consumer experience so there's only one login for customers. And simple as it sounds, it's like, maybe it's just because I'm old, multiple logins don't work for me,
Me either.
So I really think that's, you find the best in class partners, and there's great companies. I mean, those are two examples. There's many other companies that are really good in those. But how you adapt and partner and truly create that partnership and implement them, I think, is really important. And then the last for me on the new front would be looking for ways that we can improve our customer and our experience with consumers, educating them with that impactful piece of technology that may facilitate the education and the experience between the originator and the leading company in that space. I would say is Mortgage Coach. So,
Right.
Those are some of the things. I don't know if I'm supposed to be naming brands or not, but
that's fine.
I think almost everyone I mentioned is a CMBA member. So thank you all.
A shout out to the companies that are doing well. There's nothing wrong with that. There's nothing wrong with that.
So that's what I'm looking at, and it's I think there's no lack of different initiatives and things that people want to put out there. I just I believe it's all about the fundamentals. How you can shave time, cycle times, how you can lower your costs, because that's really going to matter in this, and then that through to your origination teams and the consumers, and how you can make their jobs easier. And I don't think we're talked about this in innovation. I know we're going to get there a little bit, but there's really, in my mind, two forms. One is a disruptive innovation that can occur. Uber, biggest example in industry where it's completely just disrupted a whole industry. The second is one of continuous improvement. And industry, I mean, there's you would think that with the amount of investment that's been into modernizing the experience, and I see new companies that come in and say, well, these people just don't know what they're doing, and so we're going to change the mortgage industry. And then you find out how complex it is. Thousands, I should say, of small points, vendors, all coming together into one transaction. And in a weird way, it's more complex today than it ever has been. Because the need for data accuracy, consistency, of course, now the increased IRLA, HMDA, all those different things have a downstream impact into the originator and the loan officer assistance, and the amount of data that has to be collected and put into the system, and compliance checks that you have. It really hasn't helped, at least in my viewpoint, make it a more efficient industry. So for me, this industry is the latter, where we have to continuously look for little ways to make it better.
Yeah, improving that customer experience. I think is key for everyone. So Chuck, you served as chair for our inaugural Mortgage Innovators Conference in 2019, speaking of technology in the industry. Great event, one that the organization continues to be very proud of. Of course, we're getting ready for our big return to in-person experience this year. What can you share with our listeners about the value of this event?
I just think that it's, when we started this, one of the things that was important to me, and I think it consists to today, is that there's a pragmatic application of the event. In other words, I'll kind of go to some, I'll make a parallel, like if you went to some sort of sales rally and you get all fired up, because you've heard a lot of stuff and you come back and there's not really any change because you haven't implemented the ideas you got from there. You can do the same thing with technology conferences. I remember first technology, I won't name the brand, one of the first technology conferences I went to in the mortgage industry, and it was cool. And this is, was really a lot around the point of sale technology at the time, but it wasn't as practical as I thought. And so what I wanted to do, and I think this continues today, is have it be where regardless of the level you're at in the industry, and I think that it's important for leadership to be at this industry, that you can go and really get some pragmatic ideas about your business. And it gives you a space to think about things and then come back with some really good ideas. I think it's a very, very, also very efficient way to examine what's going on in the technology front of the industry, but we also, talk about sales and marketing. We talk about process management, different things at that conference. And I think the last thing, and Susan, you've taken it to the next level on this one, was to make it accessible. I know that when I went to that first technology conference, I think it was probably $2,000 for me to go to that. And obviously, companies aren't going to send 4 or 5 people to an event like that. When you take into account travel, lodging, and then $2,000 per person, you're looking at 20 grand to send 4 or 5 people to something like that. So our Mortgage Innovator Conference is the most affordable conference by far. So proud of the legacy, and I look forward to supporting it as long as I'm part of this industry.
Oh, thank you. Yeah, our $79 buy one get one for lenders. We made it the most reasonably priced conference in the industry, and thank you for your leadership is what allowed us to launch this conference. And like I say, it's one that we continue to be very proud of, and we're looking forward to another successful event this year, May 2nd through the 4th in Anaheim.
Yeah, well, I just, the last thing on Mortgage Innovators, for those of you who are considering going. So I've been given some credit for this event, and I worked hard on the first one. But true to innovation, the bar keeps getting raised, and Paul Gelati and Margaret Chiavani have done an excellent job, and the thought leadership that continues to go into this is great. Nick Line and the team, I think, outstanding event, and I'm just looking for it to be the big legacy events in our industry.
Yeah, thank you. Yeah, we're pretty excited about it and looking forward to it here in just a few weeks. So, Chuck, thank you for joining us today. I am honored to be able to work with you on our board of directors and for your contributions to the industry and our association. Appreciate it.
Thank you so much.
Thank you for joining us today. You can access all of our Connect podcast episodes on, you can follow us on our YouTube channel. We're also available on Apple Podcast, SoundCloud, and Spotify. That's it for this week. We'll see you next time with another episode of Connect.